Hey guys, what's up? Welcome to another episode with me, Shashank Udupa. And in today's episode, I'm going to talk about three stocks that I'm looking at right now after this mega correction that's happened. Now, first of all, in the previous video, I spoke about what was happening with the Sensex, why is it falling down, and it's not just because of India, but it's because of a lot of global cues that are happening. But usually, when there's a correction like this, when the global cues are looking bad, when inflation's looking bad, when coronavirus is back on its track, some good stocks or the fundamentally good stocks are available at a very cheap rate. Now, it's not at a discounted rate because the markets did go up in a slightly very fast manner. So most of them were anyway overvalued, but there are some stocks that are coming really low, and we can start looking at these stocks from an attractive position. Now, in this video, what I'm going to do is we always say that, we should invest in fundamentally good stocks, but I'm going to start showing you three stocks that are fundamentally good that you can start doing an SIP right now on these. Okay. So let's quickly get into all these stocks and see what these stocks are. Okay. Stay tuned. Also guys, wait till the end because I'm going to show you some really good small cases that you can buy at this point in a volatile market. And to top it all off, I'm going to give you a 15% off coupon code as well right at the end. So stay tuned and watch the video. Okay, now the first stock that I'm going to show you is actually called Bajaj Finserv. Now you obviously heard of Bajaj Finserv and Bajaj Securities, Bajaj Finance. A lot of these companies are already there in the market. But if you look at Bajaj Finserv right now, it has corrected from its all-time high, which was in October 19th. From its all-time high, it has come down almost 35%. Now 35% is not a small amount. It is a massive amount. But if you ask me, Shashank, is it still corrected a lot? Does it have to correct more? Yes, it might have to correct more. I'm not saying it's not corrected enough. It will correct a little bit more because the whole global cues itself are looking bad, but it is coming at a very good position right now, right, where you can start an SIP. Now if you look at this, how it has gone up post its COVID pandemic, it was at around 10,000. From 10,000 it went up to it was here at around 10,000, and then from there it went up almost another 7,000 points up, and then now it's come back down to around 2,000 points gain. So from 10,000 it's currently sitting at 11,386. So it's almost back to its COVID levels, which is very attractive because even before COVID it was sitting at 10,000 and now it's at 11,300. So another 10% maximum margin of safety, even if you keep, it is looking good from that perspective because it has come down quite a bit. Now if you look at the P ratio and PB ratio is very healthy for this because they're in the lending department, so we don't look at PE ratio so much in this, right? We look at the PB ratio. But before that, let's quickly look at the financials of this company. Now if you look at the total revenue, right now, this is a lending company, right? And it's not just lending, they have multiple different sources and multiple different avenues. I can actually do a separate video on Bajaj Finserv. If you guys want me to, put in the comment section below. We'll do a full deep dive into Bajaj. So if I just go back into an annual view perspective, so if you look at the revenues are consistently growing from a year-on-year perspective. They have been diverging a lot into technology. They are using fintech to boost their lending process right now. Their EBITDA is also, which is earnings before interest, depreciation and tax, is also gone up. So they are making good amount of revenue, and their EPS is also significantly going up constantly, right? So it is a good stock. They do good dividend payouts as well. They do give dividends and all that. Everything on an overall perspective, it is good from a balance sheet perspective, from a cash flow perspective. Bajaj Finserv is nice, just it has corrected a bit too much, right? Even today when the market crashed, yesterday it actually fell down a lot, so it has been going down, but this looks very attractive from this position, right? And the market cap has actually come down. Apparently there's even a news where the people are saying that ITC has surpassed Bajaj Finance's market cap, which is mind-blowing. And obviously in such a scenario, safer stocks to play around would be your Hindustan Unilever, would be your ITCs, would be your Marico, which are FMCG companies, slightly recession proof, but these stocks will start coming down, and it looks very attractive. I wouldn't say discount as such, but looks very attractive right now. The second stock that I'm looking at right now is HDFC. Now I'm not talking about HDFC Bank. There's a difference. This is HDFC, which is Housing Development Finance Corporation. Okay. Now why am I saying HDFC? Is because mainly the way it is being boosted right now, even though the interest rates are going up, right? Interest rates are going up, but now public sector banks have come with this mandate where they can give you 100% loan amount for buying a home loan. Right now, obviously, HDFC is not a public sector bank, it is a private sector bank. But what usually happens is, even though it is 100% for cooperative banks, if they start boosting the housing economy, because they want to boost the housing economy, they want to keep that housing economy going well, they want people to buy more houses, they want little bit of spending, because if they cut down all the spending, then we will go into a recession market, right? So we don't want that as well. So HDFC looks very attractive. Again, if I show you the last 1 year graph from where it's fallen from its grace, Let me show you this. It's come down around 27%. Again, 27% is not bad. It has come down quite significantly. Can it go lower? Yes, it can go lower. I'm not saying it can't go lower. If you do a max chart, we'll look at it where it was in the pre-COVID levels. So look at this. It's gone down below its pre-COVID levels. In pre-COVID levels, it was 2300. Now, HDFC Limited is a very good consistent compounder in this space. Very established, very big, good cash reserves, very good maintenance on how they do their loans. Their NPAs are very low, right? The NPAs basically means non-performing assets, means bad loans are very low, right? And now they have gone below their pre-COVID era. In the pre-COVID era, they were at 2,400, now they're at 2,100, right? And has significantly something changed fundamentally? Not much. And now we also have that merger news that had come out where HDFC Bank and HDFC will merge. So this again looks at a very attractive position right now. I wouldn't again say discount, but I would say attractive position. And if we go back to their financials and check their annual financials, you will see the annual financials have grown from 2019 to 2022 quite significantly right now, right? And if you go back to that quarterly report, if you look at the quarterly report as well, they have been consistently giving returns. Now, this stock is a consistent compounder, has been compounding from a very long period of time, and the chart itself is a proof, mainly because the management team being HDFC and HDFC Bank are very, very strong, right? They are not bad management, they're very good management, and it's coming down to pre-COVID levels. So this is looking quite scary, but not scary, not for us, because for us it's a good opportunity to start averaging. Eventually, over a long period of time, this will break its old barrier and go back up. Might not happen tomorrow, might not happen after 2-3 months, it might take some time, but this is a very good stock to look at right now. And the third stock right now, with something that we all know and we all felt bad when it fell down, was Divis Labs. Okay, now I'm very shocked why Divis Labs in the last 1 year has given such bad returns. In fact, leave last 1 year. If I go back to its fall from grace, right? Let me go back here. Look at this. It's fallen almost 34%, and this is a tremendously good stock, right? The only problem that happened, and if you see the major fall came in May 18th over here, that was because of some very important news that came out, where they came and said that they were doing a big capex, a massive capex. Capex means expansion, capital expenditure. Okay, so expansion. So basically they said we are putting more manufacturing plants, we're increasing this. Usually capex, or when they expand, a company expands, it's considered a good thing for me and you, right? Because more manufacturing plants equal to more revenue, because they will do more sales, etc. But that's not the case sometimes, and I'll make a separate video on why this is not the case as well. Okay, so if you look at this, Divis Labs has currently come down. Has something gone wrong fundamentally? Nothing's gone wrong fundamentally. Will it take time to go up? 100% will take time to go up. Is it fair or unfair? We don't care about that, right? But if you look at the entire market right now, it is again come down to a very, very low point right now, and it is again looking very attractive. It is back to its original PE of the sector PE and normal PE ratio, and Divis Labs is, by the way, market leader here. Okay, so it should be slightly trading at a premium, but sadly it's not. And if you look at the financials as well, let me come here. Right, if I go to the annual financials are always good of Divis Labs. They are operating at a very good margin, right? Let me just go down and make it more clear. Yeah, they operate at a very good margin, and their DPS is up, their EPS is up, everything's good. So this is again very attractive right now, very, very, very attractive. So these are the three stocks that I am looking at right now. Again, very interesting. I've kept this on my watch list. I am averaging it now. It's not like I have a lump sum amount that I'm putting everything into the main stock. Aisa nahi hota. Averaging kar raha hu slowly. Now, apart from this, if you want to check something else, right? If you're saying, Shashank, okay, these three stocks are little risky for me, all that, there are low risk options where you can start investing, right? I found a few small cases for you guys. Now, understand, in such a scenario, right, where the market is very volatile, it is interesting to go with something that has low risk, and it is the low risk smart beta wala portfolio, because they focus on low volatility wala portfolio, right? This kind of small case that is managed, by the way, this is a managed paid one at 65,000 minimum investment, and if you want to subscribe to it, you have to pay an amount, right? Let me show you how you can do that. You should go here and you should click on 3 months or 12 months. And by the way, I'll give you a coupon code where you can get 15% off. This is the advantage of having friends who are influencers. So you automatically get 15% off over here. If you want to use it, you can use it here, right? Now, low volatile portfolio is something that is good to have at this point. Number one, if you feel that 65,000 is expensive, you can go for something like straight flush. Now, what is straight flush? They basically focus on quality stocks that do consistent compounding. Now, at this point in a bad market, people who deliver good returns will only survive, and they'll be trading at a premium. So we are looking at this is literally half the cost, again 34,000, and you can subscribe and use that code. I'll put the code in the description as well, so don't worry. Finally, if you feel that you want a cheaper version of this or a much balanced version of this, then you can go for these top everyday consumer brands like the FMCG stocks that I keep talking about. These are inflation proof kind of stocks, so you can buy this as well, you can invest in this. So basically, just to give you a small make it more easier, you don't have to keep buying all three. If you buy it once, basically the subscription, if you buy it once with the coupon code, you'll have access to all the Windmill Capital portfolios. You don't have to keep buying for each, right? So it's usually good if you're planning to do long-term SIP based investments. This is very interesting to do that. So these were the three stocks that I'm currently looking at right now. Let me come back. So guys, those are the three quick stocks that I'm looking at because the market's correcting right now and there are fundamentally good stock coming at a very low price. Obviously, discount, not discount, valuation, all that we'll not look at because they were all overvalued. That you should agree, they were all overvalued. Some stocks are still overvalued, but these are coming down to very, very small levels. And when they come to such levels, people like me and you should be very happy because this is very attractive for all of us and we will start taking all of this and keeping it in our pocket. Okay, I'll keep coming and doing such videos. If any more stocks come down at very low rates like this, right? I have 3 more stocks that I have in my list, which I think I'll do next time. But this is a good time to average in these stocks. This is also a good time to start buying dividend paying stocks because they're at an all-time low. They don't move much, but because of the market scenario, they are moving, but they will pay you a lot of dividend. I'll make a separate video on dividend paying stocks as well. Cool. Awesome. I hope you guys like this video. I hope you guys enjoy this. If you did, click on that like button, share this with your friends. And if you don't want to subscribe, don't subscribe. It's completely fine. I won't force you for that, but I hope you guys like it. Just click on that like button. I'll be very happy. Okay. This is me, Shashank Udupa, signing off. Take care. See you. Bye.